start off with the big numbers of Q3 which have come through. Credit growth numbers look strong, especially for some of the larger banks. That's what it seems to reflect. Of course, there are certain pockets where there has been an underperformance with regard to growth. How are you viewing the numbers, and any favorites within the banking pack that you're liking, or anything that's standing out for you?
So the overall credit growth is pretty strong, and that is also reflective of a potential pickup in the economy, because credit growth normally drives the economy. So credit growth was in single digits overall for the system for a long time now. Most of the large banks have reported double digit, and some of the numbers, like yesterday what I saw, Kotak and Axis and all, seem to be pretty strong. Like even HDFC Bank was okay, like not great but okay. So I think the overall space is well placed, and that's reflective of economic pickup overall. So I think Axis, from whatever numbers have come out, Axis and Kotak both look decent. So I think Axis valuation wise also is not so expensive. So my guess is that could do better. ICICI, I don't think it's come out, so
No,
that we need to still see.
Yeah.
Some of the NBFCs also have reported very strong numbers. Now NBFCs, normally I'm not very excited by very high growth in NBFCs, because that is potentially has led historically to higher NPAs also, because there is somewhat more laxity in lending vis-a-vis banks. So I think so there we need to be more distinguish more, but otherwise overall financial system seems okay. And yesterday's gross NPA numbers for the banks system as a whole also has come down to multi-year lows, so that's also a positive.
So how do you play it, Sandeep? If one were an investor today, based on valuations and based on the numbers that are flowing through, there's likely a recovery cycle among the smaller finance banks, and that's why you're starting to see credit growth pick up in most of them. Utkarsh may be an exception, but Ujjivan's numbers were very strong, Equitas' numbers were very strong, and some of the other small finance banks or smaller banks in the private side have also done fairly well for themselves. Is that a better play rather than the larger private sector banks, or do you prefer the large private sector banks?
See, normally in other sectors, when there is a growth momentum, I would like to play smaller companies, but in financials I like to stick more to larger banks, because what happens is that we've seen historically in the past, whenever credit growth has been very aggressive for the smaller institutions, it's typically led to an NPA issue couple of years down the line. So I think there might be some banks which might have changed their management structure, where it might not happen, but I think that's how we should see it. Among the smaller ones, like not very small, what we own is IDFC First Bank, because I think that is a key beneficiary whenever the interest rate cycle moves down. So they have been also growing well. They had issues related to microfinance, etc., like most of the smaller banks we talked of, which seem to be coming behind them. And among the larger ones, we have ICICI Bank, Axis and SBI.
Okay, Sandeep, have you had the chance to take a look at Trent's Q3 update? So over the weekend and yesterday, we've had updates from retail, value retail, some of the FMCG players like Marico and Dabur both. Your take on the overall consumption space, and especially first, let's talk about Trent. It seems like a weak update.
Yeah, because the expectations from Trent have gone up substantially because of the way they did historically. And now they have come to a base where I think expecting more than a 20% kind of growth is, I don't think, a realistic estimate, because without them compromising on the kind of inventory they hold and then subsequent write-offs, etc. So and there was a disruption in this quarter also because of the entire GST changes and all that. So I think subsequent quarters will show. So numbers are not bad from Trent, but not very great. Overall, on the value retail space, we are seeing some pressure. We have seen some pressure because mostly due to competitive intensity moving up, and then GST changes. So most of the companies have talked of inventory management being an issue post GST changes, because the MRPs had to change, etc. Marico and Dabur numbers were decent, and their commentary seems to be more positive than the numbers they have reported. So Marico, of course, has been a standout. Like among the consumer stocks, Marico and maybe Britannia have been standout. Like they have done well in the entire down cycle also. But I think other companies like Dabur and other companies which might report over the next few days, they could maybe be dark horses for the next 1 year.
And Sandeep, your view on ITC, given everything that's happened on the tobacco front, the cigarette tax front, we've seen a downgrade also coming in from a major brokerage today and significant price cut over there. And a lot of these brokerages believe that ITC will have to take a price hike of minimum 15 to 30 to 35% to just to be able to withstand this impact. And then maybe going ahead, that top line addition would be a different extra price hike. What do you think, or how do you think this is going to play out for some of these names?
It's going to be tough because, see, in a scenario where we would assume that it's a closed economy where there cannot be any sort of smuggling in of cigarettes or cigarettes coming in through illicit channels, etc., we would think that it's such an inelastic product that the price hike will get passed on and it might not impact demand so much. But given the fact that on one hand there could be some impact on demand, on the other hand cigarettes coming in through other channels from imports, so all those could increase. And so I think the next couple of years could be tough for ITC and the other cigarette focused companies. ITC did expand into the rest of the FMCG space.
Yes.
In that segment, unfortunately, they have been unable to scale up the profitability till now. So I think that's the challenge for them. So if they focus on that, improve profitability there, then it could improve. And the third, obviously, value driver within ITC was the hotels business, which is now a separate company. So even that doesn't support earnings.
And the most recent acquisition of Aditya Birla Pulp and Paper that they've just taken over, papers and pulps is also barely single-digit contributor to the top line. So not much of a difference there too, right?
Yeah, so the paper industry had a good cycle, then it's been in a downturn. So lately I haven't followed the paper cycle, but I'm not sure how that's doing. But but that's a commodity business, so that doesn't get a high P in any case.
Correct. I'd love to quiz you more on Trent, and I will come back to you on that, Sandeep. But quickly across. Okay, welcome back, and thanks for staying with us. Sandeep, I wanted to take a quick question with you with regard to Trent. And I know we've done enough conversation on Trent, but the question here is that even if you're penciling a 20% growth, Trent will have to do maybe 6,500 crore of top line in Q4 of FY26, which is a significantly tall ask. It's a 30% growth QOQ if they have to do that. Secondly, the valuations trade at near 100 times earnings. If you were an investor, would you be comfortable with the kind of growth that's come off and not even doing 20%, right? Would you be comfortable holding this, or would it be a disappointment for you, and would you sell?
So I think given that the stock ran up to almost, I don't know, 8,500, 9,000 levels, it's halved from there. And then most of the shareholders in this stock would tend to be more patient. So I would say that whoever is holding, they could keep on holding, expecting maybe a potential pickup in consumer demand going forward. But as a fresh buy, we could potentially look at other stocks and not really Trent at this stage.
Okay, so that is perhaps the sentiment that the street is also sharing right now, given the way we've seen the share price breaking of Trent, almost halving in the year gone by. And also brokerages are not very optimistic on what lies ahead, perhaps barring a couple of brokerages. But let's shift focus and talk about some more stocks that are in focus. You have MOIL. They've achieved the best ever production in FY26 with Q3 output that has seen about 3.5% uptake on the year-on-year basis. So that's the update coming in from MOIL. You have IEX also. On the back of its monthly electricity traded volume, that is also up by about 3% on a year-on-year basis. And of course, Adani Ports, the high-frequency indicators that these companies keep reporting. In the month of December, Adani Ports handled cargo that was an uptick of about 9% on a year-on-year basis. Containers were up 18% year-on-year. So first take, Sandeep, do these numbers look good to you in terms of the monthly update that they give? Do you think this is better than what we've seen in the past?
I haven't tracked the monthly numbers so closely, but overall the numbers are consistent with the economic pickup. argument. So that's all I could say on this.
Okay, fair
What
enough.
about IEX and what within the power pack do you like? Because the other one that's really run up is a Coal India,
Yeah.
right? How would you play power, Sandeep? You've seen a run up in PFC, REC, which are the lenders within the power pack, IREDA as well
IREDA,
to a certain
yes.
extent. It was one of your favorites as well, Kunal. And then you have Coal India running up, and then you have IEX, which there is plenty of pessimism in the space in which IEX operates. But despite that, it continues to clock decent growth.
It has decent growth, but then there is a regulatory overhang which always remains. So I think it's a challenging stock to be in fundamentally.
Right.
Power finances, specific power finances, PFC, REC, I think there was some regulation relaxation by RBI. After that, they moved up.
Yes.
But my biggest issue with them is that they are financing so much of these new energy projects, especially solar, where I think solar eventually in 2-3 years is going to have huge challenges related to profitability of whatever is being set up, the companies in the solar business, because of the huge oversupply which is going to come up. So I think longer term people have to look at those challenges. Valuations of these stocks have corrected substantially, so a trading bounce obviously can happen. Power generators tend to have low ROE, so there on an earning uptick cycle we could potentially play, but longer term I don't like them. I would say that more equipment companies are a better way to play the power sector.
So transformer companies. So
Transformer,
something like a
transmission.
transformers and rectifiers and the like.
Like transformer
Transrail
companies,
lighting.
transmission equipment companies, or many of the companies which are setting up other substations, etc. So I think those are the segments where the demand could still remain strong.
So EPC and transformers.
Yeah.
That's how you would play.
Yes.
Okay. Kunal, REC PFC on charts. He expects a trading bounce, possibly. How are charts looking?
I think a good part of the bounce has already shaped up. I think REC and PFC was at 330, 335.
That is correct.
They've moved into the 375, 380 club. So it's a good 10-15% move, which has already happened the last 3 weeks for these names. And now there could be a point where these stocks may consolidate further from current levels. Because these stocks have to spend a lot of time at those lower zones for these stocks to consolidate and then come back into a recovery mode. We've seen PSUs largely, or the power financiers, they've done very well in a phase when the PSU stocks were the most liked sector. That was in 2023-24, where the stocks gave returns of 2x, 3x in a very short span of time. Now that PSU trade is not there, it's very, very specific towards certain sectors, certain themes within the PSU names. So that's why I would believe that you might have those trading bounces. We have to be a little bit more calculative with respect to the entry and exit for these bounces, and not try and take this as a more long-term trend, something which started off or shaped up to 3 years back.
And Kunal, what about IEX on the charts? It's more than 30% trimming in the stock price in the last 6 months itself. Does that present a good opportunity to buy?
So, one of the point which Sandip was saying, that government overhang for the stock price, that's a big challenge, and that's why the stock price is trading at a multi-week low. So price-wise, it may look very attractive, but the fact that there is so much of risk which is attached to the stock price in terms of news flow, that you do not want to buy these stocks at the peak of momentum, as well as on the lower end, there is always a fear that the stock will break below its support levels. So it doesn't warrant a good, maybe a good trade, at least from my side.
Okay, we also have CA Rudramurthy who's joining us on the show. CA Rudramurthy, BV, founder director at Vachna Investments. Rudra, hi, morning, and good to be chatting with you. What is your overall outlook of the market right now, given that fundamentally a lot is happening in terms of the Q3 updates that we're getting, lots of stock-specific news and action as well. But on the charts, how do you see the markets shaping up, especially given that on a day like yesterday, we touched the Nifty all-time high and then we've seen a sharp pullback as well. So what's your view?
Good morning and thanks for having me in the show. I'm definitely bullish on this market. Every dip is a buying opportunity, but one has to understand this is not a simple buy a market where everything moves up. It is a very stock specific and a sector specific kind of a market. And also what is very peculiar is it is 3-step forward and 2-step backward. So it is not a single straight line kind of a move and a clear trending market, but still the entire move is on the upside. So every dip is a buying opportunity. Overall, you have to be very sector specific and stock specific. Till we stay above levels of 26,000, this market is a buy on dip. And you can see the base has now got shifted. Earlier, the base was between 25,800 to 26,200, 300 kind of a range. Now the base has shifted to 26,000 to 26,500. So market is a 3-step go up and a 2-step come down kind of a market. Be very sector specific, stock specific. Look at PSU banks for that matter, looking very, very bullish. Be very selective. Even OMCs can do good. Oil prices can definitely remain in the same range, and that will be very positive to stocks like, for example, Indigo, where all the negative news is already out. So for me, you have to be very sector specific, stock specific. PSU banks, OMCs, select pharma, private banks, again in that ICICI bank. So there are all pockets where you have to be on the long side. But I am bullish on this market. Every dip is a buying opportunity.
Every dip is a buying opportunity. Rudra, thank you for that view. Stay with us. Sandip, let me come to you with regard to Tata Motors. The wholesale numbers don't look enthusing at all. In fact, analysts were expecting a number of around 80,000. The number that's actually come through is 59,200 units that they have sold. That doesn't look good. Now, while a disappointment was expected, such a large disappointment, I can correlate it to the way in which Trent's numbers have also stacked up. How do you play consumption within auto? Do you play it through PV, and how do you look at Tata Motors PV's numbers in particular with regard to the JLR? Is this an opportunity if you see a 5-10% correction to buy Tata Motors?
So I think on the passenger vehicle side, many companies are doing very well. So right now, taking a bet that there could be a potential turnaround, that's why you buy X stock, I don't think is the right strategy. So there are companies like Maruti, M&M, etc. are doing so well. On the two-wheeler side, most of the companies are doing well. So why do you want to bet on a potential turnaround which might or might not happen?
Correct.
On the other hand, Tata Motors commercial vehicle business, that could potentially be doing much better. So I think if you want to play one of the two companies on the Tata Motor side, if you want to, then I think the CV company is much better.
CV companies are better. Okay. So, but that's Tata Motors CV. Within the CV space, there are plenty of ways of playing this. You have auto anchs, you have auto financiers within the CV space, which have also moved up. You've seen a run up there, and then you have this typical CV play within the auto pack. How would you play it?
So I think the pure play CV companies are better to play if you want to play the cycle. Auto ancillaries tend to be more a broad play for across the board. Auto is doing well, so I think the auto ancillary should also do well. Ashok Leyland is what I have liked, but unfortunately it's now run up so much, so I don't find value in that for a fresh buy. Whoever is holding, they can keep on holding. And then Tata Motors CV could potentially do well.
And M&M, the new launch, car looks super cool. They did that ad where the car is moving across speed breakers, and there is a tower of glasses, and the tower of glasses remains as is on the bonnet of the car. Does M&M really feature on a list of stocks that interest you?
Yeah, M&M in fact is one of our top holdings for a long time now. And there's no reason to sell the stock and it's still an underappreciated company given the fact that its products which it's launched and made successful is by far the most among any auto companies in India.
Rudra, M&M on charts?
See, for me, Harsh, definitely if I have to pick one stock when it comes to the auto pack, it will be Mahindra and Mahindra. So if you see, it has now made an attempt even to go out of that zone of 3,800, and again yesterday it just consolidated there. So strongest among all the stocks from auto will be Mahindra and Mahindra. Definitely at current market price, I will be a buyer, or use any dips to levels closer to 3,700, 3,720 zone. So start buying from current market price, and on every dips, stock is very, very strong on charts. So I won't be surprised to see 4,000 coming soon on M&M, and the number one stock which I will be betting at current market price from autos will be Mahindra and Mahindra.
Okay. Sandip, final comments. I was reading a couple of notes this morning, and especially with regard to consumption. We spoke about auto as one of the themes. and you seem to like more PV and CV more than PV as well. But if I were to just talk consumption, something like a Varun Beverages, where Morgan Stanley feels that the numbers will be far better than expected, the commentary will be stronger than expected, and therefore they've said, they've given it a target price of 600, and they've said that over the next 45 days the stock price will move up. They also have done something similar for Aditya Birla Lifestyle. They've done something similar for Jubilant Foodworks, all in different segments and sectors. They've tried and suggested that consumption uptick, these are good plays to kind of play that consumption uptick. How would you play it?
Yeah, so consumption uptick should happen, but I think right before quarterly results, how these brokerages come out with such reports is always an enigma to me. I just can't understand it. But then Varun Beverages has its own challenges related to competitive intensity as well as the slowdown in demand we are seeing. Now, next 45 days it will suddenly move up is tougher because I think the main season will be the summer season for them. What could potentially make it move up is that this time there is the forecast of a potential El Nino vis-a-vis La Nina, which was there last year. So summers could be warmer and that could lead to higher demand, but then forecasting whether to buy stocks is a very tough thing.
And what about something like a Dabur, Marico, Nestle? Would that category of stocks at all feature on something that you'd like?
I think most of these companies should do well, so we have to make our own choices. Dabur is something which we have held for many years. It's not done well at all in the last few years.
Absolutely.
But I think next couple of years could be much better. In the consumption space, I would think that Godrej Consumer is something also which could do well.
Okay.
So I think that could be another stock to look at.
So all in all, do you believe that now would be a time to see a turnaround in some of the overall staples names? I'm not talking about retail and overall consumption, but what about staples?
Yeah, there should be a turnaround because there's been 2-3 years of a downturn.
True.
And in 2024, if you go back and remember, there was a talk of that there will be a turnaround in demand. And at that time, if you see the way the stocks reacted, like most of the stocks zoomed up at that time, then but because of high inflation, the uptick in consumer demand never happened, and then all these stocks crashed. So if there is an actual uptick in consumer demand, many of these stocks could easily give double-digit returns.
Okay, Sandip, thank you so much for your time today. It was lovely chatting with you and having you in the studio as well. See you soon.